It's possible to build an oil pipeline from Quebec to the Maritimes, from Alberta to displace our oil exports to the U.S.
With the recent imposition of tariffs, a wave of outrage has swept across Canada. Voices have risen in protest, calling for a boycott of American goods, and even urging a halt to oil exports to the United States. Canada, having already declared its intent to retaliate with additional tariffs, has stood firm in its resolve. Now, it is seriously weighing the possibility of redirecting its crude oil exports to other markets, most notably China. But can Canada truly sever its oil trade ties with the U.S. and pivot toward Asia? In this report, we delve into the evolving dynamics of global energy politics and examine how Canada's position is shifting. For decades, Canada's energy exports, particularly crude oil, have been overwhelmingly reliant on its southern neighbor. Alberta, the heart of Canada's oil production, yields approximately 4 million barrels of crude each day, the bulk of which historically flowed south to refineries in the United States. But the landscape is changing. The completion of the Trans Mountain Expansion (TMX) project marks a significant shift. Global energy trends, coupled with protectionist policies introduced during the Trump administration, have urged Canada to reconsider its dependency on a single buyer. In doing so, it now seeks viable alternatives and viable leverage. The TMX project, a feat of engineering and political perseverance, stretches from Alberta to British Columbia's Pacific coast. Once limited to capacity of 300,000 barrels per day, the pipeline can now transport up to 890,000 barrels daily, following a demanding 12-year construction period and an investment of 34 billion Canadian dollars. Though its journey was marred by delays, environmental resistance, and economic hurdles, the pipeline finally commenced full operations in May 2024. Through TMX, Alberta producers are now able to bypass the United States altogether, exporting crude directly to Asia via the Pacific. While it's not yet functioning at full capacity, currently operating at 77% due to long-term contracts and elevated transport fees, utilization is projected to rise to 84% by 2025 and 92% by 2027. The economic and geopolitical implications are vast. U.S. refineries, long accustomed to buying Canadian oil at discounted rates, now face stiffer competition. Previously, over 90% of Canada's crude was shipped south, with American refineries exploiting this reliance to negotiate lower prices. For years, Western Canadian Select WCS crude was sold at a discount of $1.10, $15 per barrel compared to West Texas Intermediate WTI. That gap has now narrowed significantly, with recent figures showing the discount reduced to just $8 per barrel, translating into higher revenues for Canadian producers. Major players like Canadian Natural Resources have already reported record earnings for the first half of 2025, crediting the TMX for much of the success. Meanwhile, refineries in the U.S. Midwest, optimized for processing heavy Canadian crude, are facing rising costs and logistical hurdles in securing alternative supplies from Latin America or the Middle East. While TMX is still ramping up, the tide is clearly turning. More than half of the oil shipped from Vancouver now heads to Asia, most notably China, which has increased its imports from a mere 7,000 barrels a day to over 200,000. Countries such as Japan, India, and Taiwan have also emerged as new buyers. This diversification is already bearing fruit. By mid-2024, Canada recorded its first trade surplus in years, with crude exports via TMX cited as a key factor. Looking ahead, the benefits are not only economic, but strategic. Should the U.S. impose further tariffs or restrictions, Canada now possesses a powerful bargaining chip: diversion to Asia. Though higher transportation costs along TMX have prompted some producers to continue using cheaper U.S.-bound routes in the short term, the long-term outlook favors global expansion. Simultaneously, Canada is undertaking a parallel transformation in natural gas exports. The LNG Canada project, located on British Columbia's coast, is expected to begin production by mid-2025. This facility, backed by energy giants like Shell, Petronas, and Mitsubishi, will allow Canadian natural gas to reach Asian markets directly. Previously, Canadian gas flowed southward into an already saturated U.S. market, often selling at minimal or even negative prices. Now, like with oil, Canada has a new path and new profits. All of this points to a broader narrative. Canada's energy sector is going global. With Trans Mountain and LNG Canada, it is freeing itself from the grip of American dependency. For the U.S., this means higher prices and diminished negotiating power. If protectionist measures are enacted, such as the Trump administration's proposed 15% import tax, Canada has a means and motive to redirect exports elsewhere. Indeed, when such a tariff was floated, opposition rose swiftly from refineries, lawmakers, and consumers alike. The U.S. risks shooting itself in the foot, while Canada, equipped with new infrastructure, stands ready to weather the storm. Of course, this energy renaissance is not without controversy. Environmentalists and indigenous communities have voiced deep concerns over TMX, arguing it contradicts Canada's climate commitments. The government maintains that fossil fuels are a necessary bridge toward a greener future, providing the revenue needed to fund sustainable development. Still, the data is compelling. In 2024 alone, Canadian crude exports to Asia rose from 183,000 to 380,000 barrels per day. China now receives the lion's share. Though the U.S. remains Canada's largest customer, its dominance is fading. Ultimately, Canada's new energy trade map is more diversified, more global, and less dependent. While challenges remain, from environmental concerns to global price fluctuations, the foundation has been laid for a new chapter in Canadian energy history. What do you think about this historic shift? Share your thoughts in the comments. And to stay informed on developments from around the world, be sure to subscribe to our channel, turn on notifications, and like this video. Thank you for watching.